But okay, that's the opening bell. And the first tick on the Nifty is a cut of 50 points. And on the Sensex, it's lower by 180, 190 points. So straight away, off the bat, we're down a quarter of a percentage point on the Nifty and on the Sensex. Mid-caps too are in the red. The Nifty Bank is under pressure, and that's down close to about 130 points. So it's red on the screen when it comes to the indices. In terms of the big losers, ITA is under pressure. Wipro, HCL Tech have a cut in excess of 0.5%. Remember, the Nasdaq led the losses on Wall Street, and there is a psychological impact. When Nasdaq declines, you do see that pressure on the Indian IT companies. So Wipro, HCL Tech a bit subdued in trade. Grasim is down, and today in the opening tick, it's breached its 200-day moving average. JSW Steel has a cut of close to about 0.6%. ICICI Bank in the large cap heavyweight banks is exerting pressure. HDFC Limited too a bit subdued in trade. Auto names like Tata Motors and M&M have a sluggish start. On the gaining side, Adani Group stocks continue with their gains. So Adani Enterprises has another 1% opening gain. This week, it's rallied close to about 35%. You've got strength on Sun Pharma. Remember, Taro reported a very smart margin improvement on a quarter-on-quarter basis. Sun Pharma is yet to report numbers, but Taro's numbers look good, and that's fueling a rally in Sun Pharma. Britannia, too, is looking quite upbeat in early morning trades. So that's in the index. The Nifty has extended its loss. So after opening with a cut of 50 points, it's now down close to about 70 points, with the Sensex down 240 points. The advanced decline ratio has opened in favor of the losing side. So we've got 1,200 stocks in the red for about 1,000 stocks in the green. But lots of individual mid-cap reactions.
Well, that's right, Rima. A lot of individual stocks moving around. A word on the index, though, we started off with a cut around 40 points. We're down 60, 70 points. So that's in line with what the SGX Nifty is suggesting. 18,250, crucial mark on the downside. Let's focus on a few stocks. Good earnings reactions. Biocon is up and about. You have Bikaji as well. Margin expansion out there. The street likes that. Good growth as well. So that stock as well is up in today's trading session. Somani Ceramics as well. The stock was up close to around 2.5%. I think it's holding with some gains. Dixon, going into its numbers, the stock already saw a big rally. Valuation-wise, it's not cheap, but the numbers were pretty good out there as well. Stock is up only around 0.5% because it appears most of the play is already done. Schneider Electric as well. Numbers, I think there was an improved performance out there. So that's up close to around 8% in today's trading session. That's about all the good earnings and good positive reactions that we have got. On the flip side, you have Thyrocare. Well, that stock's under pressure. The numbers did look very, very good. JSW Energy, in fact, it pulled back close to around 3%. Will be joined by the management very shortly. They've increased their 2030 guidance in terms of the profitability, but a couple of brokerage notes point out that most of it is in the price. JSW Energy is the stock that we're talking about. Galaxy Surfactants, the management just joined us. A weakish set of numbers is what they delivered in the past quarter. Volume growth, they're hoping for 6 to around 8%. So that one, in fact, though, has pulled back close to around 4.5%. Orient Bell as well, disappointing numbers. So that stock has opened up with a sharp cut in trade today. And to wind it down, a couple of smaller pharma-oriented stocks, Dishman Pharma as well as Sequence Scientific, both of them have seen sharp cuts, in today's trading session. The awaited large trade on Mahindra CIE, that's got come about. Well, feedback was that there is very, very strong demand. And that's why we're seeing after that 1 crore shares getting changed hands, the stock is up close to around 7.5%, flying away as we speak.
Mahindra, after this, will no longer have any holding. This will be completely owned by CIE of Spain. And that deal is taking place. And this stock has been on a tear. This year, it's rallied close to about 40%. So as Mahindra has been paring down its holding in Mahindra CIE, the stock has only been gaining. And this morning as well, 3.2% equity has changed hands. The demand has been solid. And in opening minutes, this trade has been executed on 1.2 crore shares.
All right. The market, by the way, is down 40 points. We started 50 lower. The opening tick was down 50. Then there was a 20-25 point slip from there. And now the market's pulled back up. I mean, actually, it's interesting. The broader market breadth is also significantly improving. At a very rapid pace, it's kind of moved. It was marginally in the negative. And this is just the first 4 minutes of trade we're talking about. But broader market breadth is now fast approaching that 2:1 advanced decline after being negative. So, expect more moves. But for now, it's not a bad start at all. 43 points lower, although it would have been much better. I mean, just reading on the screen, if you would kind of stayed open lower and then kind of built a base and then did whatever you wanted to do. But this is, I mean, a fair bit happening right at the word go, but more on, trying to buy the dip straight away. Let's see if it holds. 18,300 is where the Nifty is now trading at. Just a few other names. I mean, last few sessions I've been mentioning this Adani Group names, and they are there this morning as well. Adani Green is up about 3.25%. Adani Wilmar is down 1.25%, just to make a mention. Adani Total Gas is up 5%. Transmission is up 5%. So, yeah, I mean, there is that pack very much active. Apart from that, Schneider, I think we mentioned, 9% higher. Dream Folks is up 4.5%. Chennai Petro is up 4%. Sudarshan Chemicals is up 10%, 431 on Sudarshan Chemicals, and backed by decent volumes for this point of the day. There is Sirma, which is up 2.5% or so. Linde India is up 4.5%. I think reacting to earnings there, Linde India as well. On the downside, apart from what we've already mentioned, okay, Adani Ports we didn't mention earlier. Adani Ports is down 1.75%. Last couple of days, these stocks have done well. Wilmar and Ports are down from that group. You got, has Polyplex seen a big kind of move up and down?
Basically, the promoters have said that they will be selling 24.3% stake to an external investor.
Yeah.
Now, this is going to take place at a very high price of about 1,810, and the stock price currently is at 1,400. But what the street doesn't like is that because they're selling about a 24.3%, it's just below the open offer threshold of 25%. So there is going to be that no open offer for the minority shareholders. And this deal between the promoters and that external investor called AGP, I think, something like that, AGP was pre-decided. They had some put-call agreement between the two, but Polyplex is taking it on the chin.
It's a big volumes as well, Rima. So, it's down, 6.5%. The low was 1389, 1390, and from there it's come up about, 30, 35 odd rupees or so. Hindalco is down 1.33%. Shree Cements is down 3%. We had the management of Shree earlier yesterday with us. AU Bank, NCC, Vivek was talking about that. NCC is starting just 1% lower, sharply down yesterday. Root Mobile is down about 2%, and so on and so forth. Metro Brands, again, another earnings reaction, I think, 3.5 lower on Metro Brands. Volumes are yet to pick up, but keep an eye on that as well. Now, I think we're getting a bit of a dip again. So the second dip of the day, 70 points, 71, 72 points lower, 18,277 is where we're at. Andrew Holland is with us, Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, good to have you with us here. Thank you very much for your time. So a lot of people who track price action, technicals, and since you do a fair bit of sort of renting and trading and in your fund as well, I'm assuming you watch that kind of thing. Which way is momentum flagging now, Andrew? A little bit. Are you starting to see first signs of that for indices here and indices out there in the US as well, which have remained remarkably stable? But last night we saw the first indications of some worries creeping in. Your thoughts?
Yeah, I think there's a technical kind of upside to the S&P if it breaks a certain level, but it just keeps kind of going above it and then very quickly falling below it. So you're not getting that extra momentum, from global markets at the moment, to push us higher. In terms of we get the tailwinds from global factors or global markets. So I think that's where we are at the moment. I think that the problem we have is the volatility is going to remain a little bit higher than usual because of this debt ceiling talks and the impasse we have at the moment. So yes, they're probably going to the brink. Yes, well, they'll probably have a deal, but they'll keep us on our toes in between time, and that's just pushing bond yields higher, globally, which is never a good sign. And obviously that could have an impact, unintended consequences again of pushing it towards the commercial real estate market in the US. So I think there's a few factors here, right? One is if the debt ceiling negotiations are favorable, which we expect they will be, and the Fed do a skip, and this is a new narrative now, we're going to skip making a decision on the next Fed meeting on June 13th, 14th, then the markets will start again thinking about interest rates falling by the end of the year, because a skip is the next stage is to say pause, That's for sure. He hasn't quite gone there yet. I think that's what markets will like, and that's why we've been seeing emerging markets do well, and the flows coming in to India as well as a part of that.
Andrew, the trick to making money in a market which is absolutely flat and consolidating is getting the call on the banks and IT right. That's where, the maximum weightage is. So what are your thoughts on banks and IT from here on? How should one position themselves from current levels?
We like the banks, and I think that's if we're right that the RBI will cut interest rates in October of this year, then banks is the place to be. Yes, there's going to be kind of consolidation or falls in between, but I think by October time that the banking sector will be a lot higher than it is today. So the banks is the place to be. With IT, I think it's had a reasonable rally over the past few weeks, and I think that's on the back of obviously Nasdaq moving higher. But the fear I have about that, it's not necessarily that the tech stocks in the US are doing that well. They're laying off lots of people, but what they're doing is using their balance sheet strength to increase dividends and give shareholders more money. So it's not really the growth prospects for the tech sector which have improved, and obviously our stocks have followed on that tailwind because the correlations are quite high. I still think there's a quarter you can wait before buying IT. If you're convinced that interest rates are falling in the US by the end of the year, then that timing you can do it now. It doesn't matter for that 5%. I think if you want to be a little bit more assured, then wait for more earnings downgrades from the IT sector, which are surely going to come.
All right. Hi, Andrew. Good morning. Nigel on this side. Last time we chatted, I was still hoping that Arsenal lifts the Premier League, but unfortunately that didn't happen. So condolences to me. Sonia is not in today, but the last time we were hoping quite a bit. But talking about the markets, give us an insight. How are you positioned? The long short positioning, have you tweaked that in the last couple of weeks or so?
Yeah, well, just on the football side, the collapse was quite remarkable. So I don't want to rub it in too much, but in terms of the positioning, we're quite neutral at the moment because we think the markets have run up quite nicely. We are more constructive on markets going ahead. Don't get me wrong, we're not negative anymore than we have been. So we would be a buyer on dips. We just feel that there's there's a few headwinds out there which are still to emerge with higher rates in the US in particular, and any kind of drag on the commercial real estate because of the credit crunch that's going on in there at the moment, not just because of the debt ceiling, but because of banks not lending or tightening their kind of regulations in who they want to lend to. So I think there's a credit crunch going on there too. So I think in the very short term, we might be in this trading range for a little bit longer with a little bit more volatility, but I think the prospects are more brighter going forward than I felt for a long time. So more constructive. So just weaving our way through a little bit of this volatility and keeping more of a neutral stance.
Andrew, markets always have this flavor of the season, right? Sometimes it's railways, sometimes it's defense. Now these electronic manufacturing companies have been doing very well, reporting very strong numbers, solid order books. Can you tell us some niche themes or sectors that you like, which you think is still not appreciated and discovered by the market, but where the underlying is looking robust?
Yeah, I mean, electronics is something I've mentioned to you in the past as being something which I think will be huge in not just in India, but for export markets too. So that's a growth story which is only just beginning. I think the other story which I think is still being neglected is the beverage industry, and I think I'm not just talking about alcohol. I'm talking about soft drinks as well, where I think the premiumization of the whole industry is really taking hold. And I think that's going to bode well, really, for profits and margins going forward. So I still like the beverage industry. I think that's just at the cusp of moving a lot higher over the next 2 to 3 years.
Okay, all right, Andrew. Thanks a lot for joining in and filling us in with your quick take. Wishing you a good day ahead. Well, time to move on and get another corporate on our show, and it's an exclusive conversation we're going to be having with the management of JSW Energy. The company reported a mixed set of earnings for Q4. While the revenues came in line, the margins were a little bit disappointing. Mr. Prashant Jain, the Joint MD and Chief Executive Officer, JSW Energy, joins us on the show. Hi, Mr. Jain. Good morning. Thanks so much for joining in. Well, the numbers are a little bit disappointing, but I think what the street is excited about is about your Vision 2.0. You have increased even the profit estimates out there. I think it was around 4,200 earlier. Now you're talking about 5,600 to around 6,000 crores odd. But let's talk about the near term. How is Q1 shaping up? Could you give us a sense in terms of prices? You know, demand is high. We're feeling the heat out here. And 15 to 16% of your power is not linked, which is good news. You can sell it in the open market. So on demand as well as on pricing.
Good morning, Nigel. So first, I will take a little bit on the quarter gone by also, because, you know, it's not the right perspective that the quarter gone by was a disappointing quarter, because in the previous quarter, previous year, there was a one-off item from the regulatory, true up, because of which the other income came. If you see adjusted normal operating income basis, our EBITDA was up by 8%. And that's where, you know, you have to see the performance gone by. And going forward in the current quarter, the 2-3 interesting things were happening. In the month of April and May, the demand was subdued because of the sporadic rains all over the country, and because of which the demand was negative, but now it is picking up. But international thermal coal prices have been falling dramatically. And if you see the the average coal price in the Q4 was $138, and which has fallen now to $102. And a lower CV coal basis, it is already in double digits. So the fuel prices will be very, very attractive in the current quarter and going forward. That's very interesting trend. And secondly, the merchant prices are also hardening up. So you are right that with our open capacity, it is going to help us tremendously.
You want to give us an insight on the coal prices? You said from 138 on an average for the last quarter, it's come to early hundreds, right? 102.
102, but on a lower CV coal, for example, 4,800 NARC basis, it will be close to, you can say that $92, $93.
Got it. And what about merchant tariffs? I remember it had gone to 10, 12 bucks, then it had come down a little bit. Give us an updated number on a blended basis, because obviously there'll be a difference between morning and evening rate.
So on a daily average is around north of 5 rupees, and last year average was 5 rupee 96 paisa. So it is a quite good, attractive tariff now, and all our units are running on a whichever is the merchant capacity are running, and we are taking advantage of that.
Okay. Morning, Mr. Jain. Would you have a specific number in terms of a guidance you can put out for short-term power sales in FY24?
So last year we did close to 1,900 million units of the merchant sales, and this year we are going to do better than that, and I'm expecting that our margins are also going to improve. Last year we did around 3,800 crore of EBITDA, which was the second highest EBITDA in the lifespan of the company. And previous high was in 2015 at a point when the merchant prices were ruling very high. And now we have a contracted business. This year, I am expecting there will be at least 60 to 70% EBITDA growth as compared to the previous year. And in FY25, I think we will be touching in a 4-figure EBITDA.
Can you talk a bit about the Mitra acquisition? What is the targeted EBITDA improvement for Mitra? And even on the cost side, what will be the debt to EBITDA for the asset, and the outlook on debt and any debt reduction plans for FY24?
It has been very interesting acquisition for us. We did the acquisition in 10,150 crores for 1,753 megawatt capacity, which translates to 5.77 crore per megawatt as compared to what we are setting up the capacity in north of 7 crore per megawatt. The normalized EBITDA of the asset will be 1,650 crore, which I explained in my last interview, as compared to the last year EBITDA of around 1,200 crore. So there is a 450 crore of EBITDA improvement plan. This translates to 943 or 953 crore per gigawatt of the EBITDA, which is substantially higher than what JSW Energy also, which is also the industry leading EBITDA generator. So this asset will be generating on that. So out of this 450 crore EBITDA improvement plan, around 390 is coming from generation. Out of 130 turbines which were down, we have already put 103, 105 turbine already put into use, and balance will be up and running by first week of June. So majority of this EBITDA improvement plan we will be capturing in the current year, and we will be achieving the run rate within this year itself. So we will be doing better than what we were guiding to the street earlier.
All right, Mr. Jain, a couple of questions now. Going through your presentation, you seem to have locked around 7.6 gigawatt of pumped hydro storage. Walk us through a couple of numbers. What is the capital outlay, point number one? What is the peaking tariff you're working with? And when does this get commissioned? Just on this one.
So Nigel, we have logged in 10.3 gigawatt, which is translating to 72 gigawatt hour of the resources. Of that, 3.4 gigawatt of the contracts we have already entered into it, out of which 2.4 gigawatt hour with the government of Karnataka and 1 gigawatt hour with the SECI. And we will be starting and commissioning all these assets as soon as PPAs are signed. So the battery storage will be completed in 18 months time frame. We are expecting by October 2024. And the 2.4 gigawatt hour contract with the government of Karnataka PCKL will be commissioned in 36 months time frame from the signing of the date of PPA. Typically, per gigawatt, the cost outlay or capex outlay is 5 to 6 crore per megawatt. So, which is 5,000 to 6,000 crore per gigawatt of the installed capacity. And typically, these assets are 6.5 hours to 8 hours of the storage. So, you can say that for 10 gigawatt of the all assets, the capital outlay will be around 50 to 60,000 crore, and which will be translating close to something like 800 crore per gigawatt hour, or 700 crore per gigawatt hour.
Okay. Right. Could you give us an estimate of what two things actually. We have power demand numbers for March. We have numbers for April. I'm talking about overall industry demand growth. I mean, actually, it was slightly lower, 2% lower in March, and April was minus. It got better, but it was still down. How are things likely to pan out for the rest of the year, in your opinion? How is May panning out? And, what will it do to prices? A lot of it will depend on the ability of producers and coal availability and things like that. What's the overall situation?
So Prashant, last year the power demand grew 9.5%. A year before that it was 8.5%. So far in the first 2 months the power demand has been subdued, but it is expected that the power demand will be growing between 6 to 8% this year. And in terms of the the impact on the prices, coal availability front, last year the total capacity addition was 16.1 gigawatt, out of which 15 gigawatt was renewable capacity. This translated to close to 4 gigawatt of the net capacity addition. As compared to the last year, demand growth was 13 gigawatt. So the demand and supply situation is not matching at this point of time, and because of which higher power demand and lower capacity addition will be translating to higher power prices going forward. So this is going to pan out. However, in terms of the coal availability per se, last year was pretty good. There was a 15% growth in the coal production for the country. And this year also we are going to see the good improvement, and thermal coal prices are coming down. So this could be a good situation for the power sector for next 2-3 year perspective in terms of the demand supply situation mismatch. However, for long-term basis, government has taken a lot of initiatives, and which will be ramping up the renewable capacity addition in the country.
Okay, all right. Very quickly, before we let you go, should we see some value unlocking in your green vertical? For the time being, the street is listening to what you're saying, Prashant. From the start of trade today, that's just a few minutes ago, the stock has moved into the green. So the street likes what you're saying. But is there any value unlocking we're going to see on the green vertical? Maybe getting a PEA, maybe an INVIT, some kind of unlocking?
So we have been continuously working on the shareholder value unlocking, and we see quite a good prospects in terms of the growth of the business, as we have also spelled out in our presentation that balance sheet will be growing by 25%, at a CAGR for next 7 years, and we are quite optimistic about listing or value unlocking in our renewable business in due course of time. So there are a lot of options are on the table, and we are working on that. And at the right point of time, we will be taking the decision.
Just one final question on In Bharat. One clarification: will the entire capacity be set up for merchants? Because earlier the expectation was that part of the capacity would be tied up. And how would this change the economics?
So this is a pithead plant, and we bought it in NCLT. 2 units are there, 350 megawatt each. And we are overhauling those units. One of the unit was commissioned, so which we should be seeing up and running and fully commissioned on the bar by end of the second quarter current financial year, and second unit by end of the financial year. This is a pithead plant where the variable cost is going to be one of the lowest in the country. And looking at the macro situation, we expect that we will be running this unit on a merchant basis for some time. And as and when we see the opportunities to capitalize on the long-term PPA, we will be looking into it. Earlier, we were looking that to set up a polysilicon facility at that plant in order to backward integrate. But looking at the macro situation in China, we are expecting there will be an oversupply of polysilicon for at least 3-4 years, and because of which the polysilicon prices will be subdued. So because of the change in the market dynamics and macro environment, we are taking a decision to keep this facility on a merchant basis for some more time.
All right, Mr. Jain, we'll leave it there. Thank you very much. Good luck. Appreciate you joining in here on CNBC every quarter. Thanks indeed. Well, that's the management of JSW Energy with some perspective on the numbers and the outlook going forward. The market's looking good. We've recovered. JSW Energy is up 2%, but the Nifty has come up as well. So the broader market has come up quite nicely. We are just down 20 points on the index at this stage. So this is quite remarkable. Now, is this not the final move, but is this the is this thrust going to remain is the question, and can the market build on this, or are we likely to see at some point in the course of the day, because this is still the first 30 minutes of trade just about, are we likely to see another move lower before market finding some sort of a equilibrium? 18,333 is where the index is trading at. I did mention early on that the market breadth had flipped, and that continues to stay flipped. So it's almost 2:1. 1,230 stocks are higher, and you've got about 750 stocks which are lower. So broader markets are looking good. We'll take a quick break here. We've got a very interesting conversation lined up for you. The management of Amara Raja Batteries will join in to talk about their fourth quarter earnings. Little later, after that, we'll have Ramesh Gehani of Endurance Technologies to talk about their earnings as well. Stay tuned.
Welcome back. The company on our radar right now is Amara Raja. The company has witnessed a healthy revenue growth and margins too have expanded by 380 basis points on a year-on-year basis. The company has recommended a final dividend of ₹3.20. We're now joined by Harshvardhan Gaurineni, the Executive Director at Amara Raja Batteries, on the show now. Morning, and thanks so much for joining in. While your margins have expanded on a year-on-year basis, on a quarter-on-quarter basis, they have been under pressure. I think 13.9% versus 15.7% in Q3. Can you explain what led to the sequential margin drop and what is the outlook on margins going ahead? And break that up in terms of the lead cost, the pricing from here on.
Sure. First of all, thank you for having me this morning. I think if you look at our Q4 in regards to our Q3, Q4 typically have lower volumes heading into the new financial year, so that's pretty typical of the industry. And going forward, we've had some very good demand across all of our focus markets in the previous financial year, and we're carrying that momentum into Q1. In terms of commodity prices, they're at a reasonable level right now, and I believe that with our increased capacity utilization, we'll continue to maintain our margins.
So margins will be at about 13-14% for FY24?
I can't give such clear guidance, but if commodities remain around the same level as now, we can see similar results.
Harshvardhan, hi, good morning. Where does your in the core lead acid business, what is Amara Raja's market share? Because you said there was in the last quarter there was a little bit of let up. So on a quarter-on-quarter basis, while your revenues are down about 8%, a competitor like Exide has managed to grow their revenues by about 5% or so. So could you just explain that dynamic to us? What's happening? Sort of from a competitor standpoint as well, market shares, where do they stand and how do you see that progressing from here?
Sure, Prashant. When it comes to the Q4, the biggest differential would be in the inverter battery segment, which is highly seasonal in nature. So that is a segment that we are less represented in. But when it comes to four-wheeler aftermarket, we're at about 35% market share. Similarly, in the OE segment as well, we're very strong in the telecom segment at 60% market share, and UPS as well at about 35%. So those are market shares we're sustaining. The seasonality impact was clearly evident in Q4.
How is the demand? What's your sense? I mean, how is the demand outlook according to you strong? And if you can put some numbers to it, that will be great. I mean, what do you expect unit-wise volumes to grow in FY24 as compared to FY23?
In FY24, we expect to continue to see low double-digit growth in volumes. This is primarily led by strong demand in telecom, especially supported by the 5G rollout. Automotive production is nearly back to pre-pandemic levels, so that's been a good demand driver. We've also seen a very good offtake in our export business. So all those put together, we're expecting to remain at a growth of, a double-digit growth.
All right. Hi, Harshvardhan. Good morning. Thanks so much for joining in. You briefly mentioned exports. Could you tell us, as a percentage of your total pie, how much does exports contribute? And I believe you're looking at upping that. So where do you see that contribution headed?
Sure, Nigel. Right now, we're at about 12% of our overall revenue. We're heavily concentrated in the Indian Ocean Rim. Outside of India, we actually have market leadership positions in the automotive aftermarket in Singapore, Malaysia, Cambodia, and the UAE, and have very good penetration in other markets as well. We see good price realizations and good margin potential in these markets and in new geographies like the Western markets. So we're trying to get a much larger share from exports going forward. To put that in perspective, as a lead-acid battery player, we're about 2.5% of the global market right now. So we have a clear headroom for growth there, and that's what we're pursuing.
You have also announced the acquisition of 100% stake in a promoter entity company called Amara Raja Power Systems, and you will be paying a cash consideration of 133 crores. Can you tell us about the growth prospects of Amara Raja Power Systems? In FY23, it had a revenue of about 184 crores and margins of about 11%. How much do you think you will be able to expand that?
See, it's a proposed transaction right now, but going forward, it has a lot of synergies with our new energy business and the potentials we see there. So being a manufacturer of chargers and charger components, we see that it'll grow along with our new energy business at very high growth potential. To put it in exact numbers would be a little difficult now, given our base is so small.
Right. Harshvardhan, you've started work on the Giga Corridor project, right? I mean, this is the lithium-ion cells. Could you give us some timelines about when this will kick off and what will this mean for the overall revenues of the company?
Sure. So, Prashant, as you said, we've laid the foundation stone for the Giga Corridor here in Telangana. We'll be looking to scale up to an ultimate capacity of about 16 gigawatt hours with an investment outlay of about 9,500 crores. Of course, this will be heavily dependent on how domestic demand picks up. And in terms of the revenue we can get back from it, with if you can take a standard current pricing, we're looking to be able to rival the lead acid business within the next 5 to 6 years.
Sorry, but you haven't. What would be? I mean, if you put in 9,500 crores and say 5-6 years down the line, what would the shape of this business be like in terms of scale of opportunity? Of course, there are lots of variables, where prices will be and how technology changes, etc. But at this stage, what's the projection?
See, that 9,500 crores we're planning to outlay over maybe 10 years. But if you say the next 5 to 6 years, I think with consistent increase in demand, I think it would be realistic to see another billion-dollar business.
Okay, all right. Harshvardhan, a couple of more questions. There'll be technology that will be involved as well, right? To go ahead with this transition that you're talking about. Are you tying up with any technology partners? Because that's a risk, right? It takes a few years, and by that time, hopefully the technology doesn't go obsolete. So I wanted your comment on that.
That's a very good point, Nigel. We have a bimodal approach that we're taking to the development of technology. One is, of course, building our internal competency, which will take its own time. And we're also actively searching for technology partners at various levels of cooperation to help us fast track this. As you said, the change in technology is much more rapid when it comes to lithium ion. We're aware of that. And the way we're also sequencing our investments is to first start with the customer qualification plan, where we have room to work with more chemistries, and also have a scope to fine-tune our manufacturing process before we take up the larger parts of the investment.
Harshvardhan, just one last point. When you say the Giga Corridor, I mean, that is basically just the lithium-ion manufacturing facility, right? That's what you refer to.
Yes, sir. So basically, the Amara Raja Giga Corridor here in Telangana will ultimately house about 16 gigawatt hours of cell manufacturing and up to 5 gigawatt hours of pack assembly. That's what it consists of.
All right, fair enough. We'll leave it there, Harshvardhan. It's a pleasure speaking with you, and I hope you come back soon again as we continue to track the progress here. But thank you very much for answering all those questions patiently. Given the current timelines and the progress on the lithium-ion manufacturing facility, Amara Raja telling us that the total business of Amara Raja could double in the next 5 to 6 years, based on the investments they're making in this particular facility. The foundation stone has been laid, and this is a long drawn-out project which they are embarking on. They're also looking for a technology partner for that business. Well, 625 on Amara Raja, stocks down about 1.5% or so. Let's stick with the auto ang space. Endurance Technologies is the next corporate on our radar. The company saw revenue growth in the fourth quarter, muted one. But for FY23, revenues were up 16%. Margins for the full year saw a decline due to increasing energy costs in Europe. Ramesh Gehani is Executive Director and COO at the company. He's joining us right now to take some questions. Mr. Gehani, great to have you with us here. Thank you very much for your time. I just want to start by focusing on Europe. In the fourth quarter, the European revenues went up about 8% year on year in euro terms. There was some recovery in car registrations there as well. Could you tell us how are things shaping up in the new year in FY24, and what are projections for that geography according to you?
Well, Q4, good morning everyone. Q4 has been showing better results, but what I understand overall the sentiment is a bit low because of the inflation issues, and otherwise what people are trying to do is trying to readjust themselves to the business environment over there. Like we have acquired businesses for EV platforms and so on, and some kind of compensation has come from the government and the customers for the energy cost increases. So these are the positive signs. But the new car registrations, although up, the productions and the production of the OEMs have also increased, and it seems there's a feel that maybe the stocks at the dealers' point will increase, and there will be some inflationary pressures and some downturn expected by the year end. So that's a fear of sentiment.
So on the top line for Europe, in terms of volumes, you're still a bit cautious. What about on the margins? Because gas prices have started falling in Europe. Do you think this will aid the margins that the Europe business clocked in? Can it be higher in FY24?
Certainly, yes. See, if you compare what the energy cost and gas prices went up by almost 100%, which was absolutely absurd. Today, we are finding that the energy prices are just about 3 times from the lowest. And some part of compensation has also happened from the OEMs. The good part is that energy has now become an indexing element for our industry. So anything which goes down or up, is getting indexed, and the impact is not as much. But if you look into what is happening currently, that the energy costs are coming down, and which will have a positive impact on our margins.
So okay, do you want to quantify that, sir? Better utilization levels at a couple of your plants, Halol, Karnataka as well. Can you go to 13-14%, mid-teens? Is that doable in this year, given that input costs have cooled off? Capacity utilization will move up as well? Yeah.
See, I see no reason why that should not happen. The kind of strategies which we have built up for ourselves. You mentioned about Halol. We've picked up some extra orders from our customers for some around 2,000 assemblies per day extra. So that's related to Halol. Other Indian customers have also given us extra orders. Our order book has been close to 935 crores this year, out of which I've got EV business wins also. So I see no reason why we should not be inching towards better margins in the coming year.
Better would be 14%, 15%? What would it be?
Let's not put a number. Nigel, let's not put a number, a forward-looking number onto that. Our endeavor is always to improve every goalpost that we reach.
Okay, that is overall margins. So let's keep it between 13 and 15% without getting very precise. But in Europe, where you've seen improvement in margins to almost 17.5% or so, there is it looking a little more certain that you'll be able to hold that level this year?
Well, it all depends on the commodity prices also. In case there is an impact of commodity prices which is delayed in indexing or whatever, there can be some variation in the margin. But I also, from Europe perspective, I see no reason why we should not get at higher levels, because our order wins have been pretty aggressive and pretty promising.
Your order wins have been pretty strong. I think you have a request for quote of about 2,600 crores from OEMs, which gives you great visibility of the possibility of revenue growth for the India business. Can you talk about what the India business numbers could look like in FY24?
Again, I would say that we don't normally put any forward-looking numbers, but we have always been outperforming the industry. As you may have seen this year also, the industry was just about 2.9% up, or on overall basis, it was 11.8% for all categories, and we have performed 16.6%. But if I look into the space of only two-wheelers and three-wheelers, where we are dominant, or our largest share of business comes from there, our increase is around 16.6%, whereas the industry has grown only 3%. This is in spite of the fact that the export market of motorcycles has come down quite sharply. close to 25% is the export. This is in spite of the fact that approximately 3.9 or 4 million vehicles from the peak of previous years seen are still missing in the system. The total volumes are lower by 4 million vehicles as compared to the highest that we've seen before. In spite of that, our sales is up by 16%. So I'm sure, the way we are proceeding and the way we are collecting our orders and our focus on our business model, I see no reason why we should not be improving from here. As far as new business wins are concerned or RFQs are concerned, which you mentioned, our generation of RFQs is always close to 2,600 to 3,000 crores. It's more important is what's the conversion ratio of that to new business wins.
All right, Mr. Gyani, final question from my end on the EV part of the business. Out of the total order inflows, I think 1,000 crores or I think 30-40% was from EVs, right? In the last year, the new wins that came in. Could you tell us what is the outlook for this year? And also EV as a percentage of your revenues, how much will they constitute?
See, I can only tell you that EV is now moving up as far as the revenues are concerned, and even the volumes in the market are increasing. Like I believe that 780,000 vehicles have been made, which is close to 200% increase against the previous years. So it has gained traction on the numbers as far as vehicles are concerned, and our business wins have been close to 600 crores in the past, and we have won businesses in brakes, in castings, and suspension. For all these product verticals that we have been acquiring new businesses in EV segments also.
All right, Mr. Gyani, we'll leave it there. Thank you very much for joining us, and it's a pleasure speaking with you here on CNBC-TV18. Good luck, sir, and till next time. Well, you've got the market, which is just now come back into the green. I mean, we were down at the low point, 75 points, but it's a remarkable recovery. Within the first 45 minutes, we are back in the green. Just a straight move higher to now the green zone. 18,350 is where the index is trading at. So which means that we are now, just about there. The high yesterday was 18,419 from where the market left off and closed at 18,348, and now we've recovered at least yesterday's levels from 330. We'll take a quick break here. Mitesh will be with us with some technical trading setups. That'll be interesting to hear Mitesh on what to do now as the market continues to pull higher. Stay tuned.